people on board is making sure that the population.
The latest Absa Africa Financial Markets Index today released the 2023 report in Kampala, ranking Uganda's financial sector as the highest growing within the East African region and also being the fourth in Africa. The financial index by Absa evaluates financial market development in 28 countries and highlights economies with the most supportive environment for effective markets. According to the 2023 report, Uganda scored 62%, above Kenya at 5%, Tanzania at 55%, Rwanda 44% and DRC at 35%. In Africa, Uganda ranks behind South Africa at 88%, Mauritius at 77% and Nigeria at 67%.
For the second year running, scores have risen for a majority of the AFMI countries. In 17 countries, scores are higher in the 2023 report than when they were first introduced to the index. As a country, Uganda's ranking has improved from 10th when the report was first released in 2017 to 5th in 2021, then 4th in 2022. And pleasingly, I am proud to announce that we have maintained the 4th position out of 28 markets for a second year running in 2023.
In spite of the commendable performance, the report does emphasize that Uganda's score witnessed a decline from 64.4% in 2022. The decrease can be primarily attributed to a weaker performance in terms of access to foreign exchange.
For Uganda, one of the things holding it back is around the foreign exchange pillar. Foreign reserves are a little bit low. We also have part of the index that looks very much at how deep are local financial markets, how large are local pension funds. And so one of the uncomfortable truths is that here in Uganda, pension fund assets per person across the entire economy, when we average it out, are less than $150 per person.
Commenting about the report, the Deputy Bank of Uganda Governor Michael Ating Ego hailed Uganda's performance despite the challenges.
To us, this is commendable, considering that our economy, like many others, was adversely affected by COVID-19 pandemic and the well-known effects of the Russia-Ukraine war. Now, the resulting global supply chain shocks put pressure on domestic inflation, particularly in the second half of 2022, where we hit double digits inflation for the first time since 2011, and it went up to 10.7 in the month of October for headline and about 9.7 for core. And of course, it was also characterized by higher interest rates, which caused liquidity tightness, effectively disrupting financial resources. And as a result,
he said Bank of Uganda's decisive macroeconomic and macroprudential policy measures have helped to shield the domestic economy and financial system from the complete pass-through of various external shocks.
Specifically, the measures largely contributed to curbing exchange rate volatility and lowering inflation. On the macro front, GDP growth, looking at the latest numbers for the quarter ended 2023, is posted at 5.3%, and the economy is projected to grow at 6% in the financial year 23-24. Inflation has moderated towards the end of 2023, and for the last 5 months, it has averaged around 2.5% per annum for headline, and core is slightly below that, about 2.3 to 2.4. With the medium outlook at 5% come 25-26, in the near term, we think it's going to be under 5%.
The 2023 report of Absa Africa Financial Markets Index highlights the necessity for enhancement, as Uganda's performance in terms of the capacity of domestic investors was relatively poor. Compiled by Rita Nandera for Church of Uganda Family TV, News at 8.